You bought a premium at 500 call. Stock is not at all moving. 502, 505, 499, 497 for 3 days. 25% option will become lost. Then you exit. This is disaster management, right? But when you make an entry at 500, your stop loss is 490, 490, and by the time option will give you only 15% loss, exit here. Don't wait for 25%. Are we clear, sir, madam? Coming back. So let's say like we'll keep 1% stop loss. Your loss will be out of, instead of 3,600 loss, your loss will be only 1,900 because a partial loss is covered here in the sold option. Partial loss is covered here in the sold option. Even if it is 1.5% loss, 5,000 rupees loss is covered 50%, 45 to 50% it is covered in the sold option. Your loss will be only 2,600 rupees in the same day. In case if it is after 3 days, still it will be somewhere around the same thing only, because here also theta decay will happen. Here also theta decay will happen. So number of days will give an impact. Now let's say like you didn't exit in the third day, loss will be exponential. How profit is exponential, loss also will be exponential, subject to 7,225. But we are not supposed to do this at any point of time. Can I get one line of yes from everyone? This is fine. 1.5% stop loss is fine, but you cannot hold this strategy at the end of the expiry if it is in loss. You can hold the strategy till the end of the expiry if it is in big profit. If it is in 5% profit, still there is no point in holding, because you may reach only till 12,000 rupees. Again, if the stock is coming down, you may lose this profit also. So it is always good to book profit at 3 and 5%. That is sufficient for us. Our target in stock market should be, especially when you trade in derivative, out of 240 days, trade only for 120 days. We should try to make profit in 90 days. This is sufficient. Our target will be done. You will get sufficient money in this trading session itself. Are we clear? Any doubt? What happened if we choose same or near price premium instead of 50% difference? It will become a hedge. It will become a, okay, let's see what will happen. Okay, now see here. When profit rises, loss also will be rise. Right? When loss comes, in simple, you can see here, is there any use? No use, right? For this, either it has to expire in the same range bound, number one. So if it is expiring in the same range bound, definitely you will end up in loss only. If it is 5%, yes, you make profit. If it is negative 5%, you end up in loss only, because we are in long trend. Right? So the same thing applies for a put option, that is bear put spread. Bear put spread by one lot ATM PE, sell third to fourth strike one lot PE option. PE, same PE. No CE and PE will come in picture in one strategy. It will be CE and CE or PE and PE. So now I am expecting this stock to come downside. Okay, this stock to come downside. I saw one more Okay, this is completely bullish. This stock we cannot touch for either direction, right? So we take Reliance itself just for an example. You can see now. Let's say like stock is going to crash. So what I'll do is I'll buy ATM put 46 and I'll sell fourth strike. So my profit will be 12,000 rupees, loss will be 7,000 rupees. If it is coming down, I make profit. If it is going up, hitting 1.5% stop loss, I make loss of 3,000 rupees. Right. So let's see the remaining contents. Bull call spread. Traders should remember that as long as they are in short a call option, as long as you are in short a call option or put option for bull put spread, right? They should not sell the call option which is bought. So that means when you buy call, sell put. So if you close this, what will happen? This will become naked. So this is exposed to unlimited loss. Are we clear? That is what it is mentioned here. I'll give you the document. Please read this and understand. That is very important. Right? Traders should remember that as long as they are in short a call option, they should not sell their call option which is bought if they don't want to expose themselves to unlimited risk. Naked short call have unlimited risk. Also remember the order of buying call and selling call should be traded immediately within minutes or within the bracket orders. Always have analysis for entry with stop loss to minimize the risk and to take advantage of the strategy. Right. Next. Best stocks to trade. Stocks should not be under any factors of earning, economic data release, or news. So it is not a double side trading, right? Double side trading you can do by CE and PE. So it is not a both the side trade. So we are expecting only uptrend here in bull call spread, downtrend here in bear put spread. So if the news is against us, we may hit unlimited loss immediately. I'm sorry, the limited loss, the predefined loss immediately. So best time to trade is the risk and reward should be 1:1.5. So that means you can see here 7,000, 12,000. So this can be considered. Are we clear? Anywhere when you see the risk and reward is 1:1, avoid. Risk and reward is risk is 2 and reward is 1, avoid. So let's see how it will happen. Can we take this combination? No use, right? 1:1. 1:0.9, 1:1.1. No. So we have to pick this ratios. Are we clear, sir, madam? We should have a cushion for making profit. We should have a cushion for making profit. Advantages. There is no need for the stock to give big movement like 5-10%, 3 to 5% is sufficient. Range analysis is sufficient to participate in this strategy. Just 2 to 3% target is sufficient. Risk is limited, reward is also limited, timeline is known. So the whether you like or not, the end of the day is last day of the holding period. Span margin is less. If the trades are accurate and risk and reward is picked at the right time, we can make higher return on investment. So whatever I showed for bull call spread, same thing will be just opposite in the put option for bear put spread. Any doubts? If we take further away call for selling, what will happen? Further away call for selling, the risk will be less. I'm sorry, the risk will be more. Let's say like, let me go for call option buy. Let's say like I am taking just what is happening? Reward is 48,000, loss is 11,000. both will increase. Both will increase. Instead, you can buy a, see, when the premium is very, very less. See, why we are selling a premium is in case when it goes down, it should cover my partial loss. Sir, madam, please understand the logic. Okay. This strategy, the reason itself is if stock is down by 1.5%, instead of taking 5,000 loss, I should, the other premium which I am selling should give me, it should cover the loss. That is the logic. Instead of, see, when I make 5,800 loss, I'll take the 736 also, right? I can go with naked by itself. At least I'll get upside unlimited profit, right? Why I should take that, right? You can see when I go with unlimited, when I go with naked position, it is 12,250 is the maximum loss. And when I go with sell 11,475, how does it make a big difference? So the purpose comes only when you come to a nearer strike. When you go to far strike, it is not serving the purpose. Right? So any other doubts? So you should know where to implement these strategies. That is very important. That is, everything should have a trade setup. Simply we cannot buy and sell considering, see, excuse me. So this stock in this place, we don't have any trade. Just because of Reliance, we cannot trade this. You should have a trade setup. Then when you pick, yes, strategies will work. Strategies will work only when you implement in the trade setup. Then only stop loss will come into picture. Target will come into picture. Flat stocks, if you buy, if you sell, especially in derivatives, premium will be key. Right. So tomorrow, do we need to have a session on account of Ramzan? Among bull spread and buying future, which is you can do it. So these all depends upon the end user only. So I'll put a poll whether tomorrow session is required or not. So anyway, I'm okay with that. Right. So thanks a lot. Happy Ramzan. So let's meet tomorrow or day after tomorrow evening. Thank you. Good night.